If your trades aren't playing out as you anticipated on CPI week, then this video is for you. I used to have the exact same issue, but now I have the solution, so let's get into it. So when it comes to the formation of a regular week without CPI, you'd probably agree with me that we're simply looking for price to manipulate some kind of liquidity and then build bullish order flow towards your main bullish liquidity target. The same for a bearish week, right? We're simply looking for price to manipulate liquidity and then build bearish order flow until price reaches your main liquidity target. Okay, that's usually what we're looking for. Now, when it comes to playing these same weekly expansions on CPI week, we're still looking for the same thing to form, except the CPI release can actually dictate when these things take place. So when the liquidity sweep takes place and when the reach for the main target takes place will be based on the CPI release a lot of the time. So let me give you a couple of examples of what I'm talking about. Okay, so most recently we had a bearish week on the dollar index. Okay, we're looking at these 5 candles, okay, that ultimately moved price to the downside. Now, my personal target was this external range liquidity. Okay, so let's just label that target. That was my main target. Okay, and CPI was on Thursday at 1:30. Okay, and this bearish candle here is on Thursday. Okay, and you can see that it was that candle that reached for the main liquidity target, and the days before that didn't really get anywhere. So you can see already how the weekly expansion was really based upon the CPI release. Now, this next example is on gold for the release on March the 12th, 2025. So I would say that the main targets for this week is this buy side liquidity here and also this large external range liquidity here. Okay, those were my 2 draws, and the start of the week opened up and moved lower and swept out liquidity. Now, this CPI release was here on the 12th of March. And you can see that it wasn't until that CPI release that price began to move towards and through the buy side liquidity targets. You can see that it was taken on CPI and then the following day took the next external range liquidity target. But nothing was reached for in terms of targets until after the release. Okay, so another example, this is the release from January the 15th, 2025. Okay, price took out this external range liquidity and I was anticipating a return to this internal range liquidity. If we look at how the week formed, okay, this is Monday. So price has run to the upside and taken out previous day's high. Okay, so we've taken out liquidity and then price was moving back towards this internal range liquidity target. Now, CPI was on the 15th, okay, and you can see price didn't reach the internal range liquidity target until the 15th. And if we take it one step further and go down onto the 1 hour, it was this bearish candle here that contained the CPI release. And you can see it was that candle that swept out all of this sell side liquidity over here. Let me just mark it up. It's just a bunch of low resistance liquidity that was all swept, and the daily internal range liquidity level was targeted by the CPI release. Now, I could show you these examples all day, okay? I want you to go and have a look at the CPI releases yourself. But we're just going to go over one more and then we're going to get into the rest of the video. So we have this major level of buy side liquidity up here. Okay, the way that the week has begun to form is we've actually just expanded to the upside right out the gate. Okay, this is Monday, Tuesday, Wednesday. Now the CPI release is on this day here. It is on Wednesday, and you can already see that price reached for that buy side liquidity on the day of the CPI release. And then if we have a look on the hourly chart, okay, this candle here, this 1 p.m. candle is the CPI release candle. Okay, at 1:30, that's when the CPI was released. Price took out this old low, and then it wasn't until after the release that price actually started to run and took out this major level of buy side liquidity. Okay, so you're seeing in those examples that CPI affects the weekly expansion in one of 2 ways. The first way that it's affecting the expansion is where we're anticipating a liquidity sweep, right? We're anticipating that liquidity sweep before the run towards the target, but price stalls and we don't actually get that manipulation until CPI, right? And then CPI releases, and that is the sweep of liquidity, right? CPI will come out and run against the draw and take out liquidity. And then it's only after that manipulation from CPI that price begins to run towards the liquidity. Now, the other way that it's affecting the weekly expansion is that we get that manipulation before the release, right? Price manipulates liquidity as we were anticipating, but then after we get this liquidity sweep, price stalls, right? And it doesn't go and reach the main liquidity target until CPI release. And you'll see that CPI either runs price completely to the target in one go, or it will run towards the target and then the rest of the week will complete the rest of the run, right? But essentially you're not getting that run to the main target until after CPI has released. So where you're likely to be taking the most losses on CPI week is when you're getting in these trades and you're expecting them to run all the way to the liquidity target before the CPI release has even come out. But we know that the CPI release is going to be the main driver of the week, right? It's going to be what completes the main objectives, whether that is the liquidity sweep or running to the liquidity target. So how do we actually go about trading on CPI week without getting caught up in, whatever bullshit the release decides to do, okay? Now, there's two options for that. The first option is to not trade until after the CPI release, okay? Then after the CPI release comes out, you just trade as normal. It's business as usual, okay? That's the first option, which I know you don't want to do, right? I don't even want to wait till after the release if price looks like it's setting up a nice position. So the second option is what I personally use, right? I have a protocol that I follow that allows me to get in trades and get out with profits without getting faked out due to price stalling before the CPI release. Okay, so let me show you this protocol and then I'll show you some examples of when it played out nicely for me. Now, I'll show you in a bullish context and a bearish context. So let's say, for instance, I'm anticipating a bullish week to play out like this, okay? I'm looking for price to sweep out some kind of sell side liquidity, and I have a major target in mind, right? I have a main buy side liquidity target that I'm expecting to get reached by the weekly expansion, okay? That target that we are expecting to get hit on CPI week, we know that there's a high chance that it's not going to get hit until after the release. So what I personally do is I identify targets that are on the way there, but they're not like the main target that I'm expecting to get hit. So for instance, once price forms the manipulation, we probably have a high that formed before the manipulation took place. And then the whole time price is building bullish order flow here on the way to that target. These highs here are good liquidity levels to take profits, but it's not the main liquidity target, right? If price wants to stall before the CPI release, before it reaches this target, it's likely going to go and tag one of these levels and then reverse, right? I've seen a lot of instances where price tags one of these levels and then CPI comes along and it reverses and manipulates before reaching for this target, okay? So what I like to do is identify liquidity levels like this that are in line with the bias, and I just full TP at them, right? Where I'd usually hold for the major liquidity target, I'll just full TP at these smaller levels, right? And secure profits, because I understand that if price is going to stall and not reach here until CPI, it's likely to reverse and give larger reactions away from these levels here, right? So that's why I make my TP instead, right? If we go on to a bearish example, it's the exact same thing. Let's say I'm anticipating a bearish week. I want to see price manipulate some kind of liquidity and then run towards a bearish target, okay? And CPI is on Wednesday, all right? Let's just say CPI is on Wednesday and we form this high up here on Monday, okay? We form this high on Monday and price starts to build this bearish order flow. Now, I still see this as a valid trade setup, right? So I still want to get in the move, but because I know that this target has a potential to get left until after the release, I'm going to be conservative with where I'm taking profits. So I just identify smaller liquidity targets along the way, okay? And we're going to just TP at those, right? It might hurt you because my price might actually go and run for the main target before CPI. It might actually happen, but there's a lower probability of it happening. So you're better off just going with the conservative targets and take in your profits along the way, right? Because like I say, if price wants to stall and it wants to reach for this liquidity but not this one, then there's a high chance that price is going to reverse from here. And I've seen it happen so many times, right? I'll take a trade on the morning of CPI and I'll TP at one of these conservative targets, right? Let's say this here is CPI morning, okay? So London session, CPI. We'll actually label it CPI London, right? So you don't get confused. Okay, and I get in a trade there. Now, so many times I see price reach for this liquidity target and then reverse. And then it is CPI up here that then runs towards the target. Okay, and that is why I've built this protocol, because I'm here to stop you from taking losses like that, because I've done it too many times and it's really pointless because you can still get great returns without holding for major targets on CPI week, right? You might as well just be conservative and get your profits, right? So now let me show you some examples of when this has worked out really nicely for me. All right, so this first example that I'm going to show you is actually on the gold example that I went over earlier, okay? So personally, I was bullish on the week, right? I was anticipating the week to push to the upside. We had respected this IFVG level, okay? This bearish candles Monday, then Tuesday impulse to the upside, okay? Now, my main targets was this level of buy-side liquidity and also this level of buy-side liquidity here, okay? So those were my two main liquidity targets, but because it's CPI, I understand that these may not get hit until after the release. If we're thinking about the objectives of sweep of liquidity and run to target, we already had the sweep of liquidity on Monday. Okay, so price didn't stall to manipulate. Okay, so in my head now, price potentially is going to stall before reaching for these targets. Okay, but there was a clean setup in London session on the morning of CPI day, okay, which I still want to be able to capitalize on. So what I have to do is find an alternative target that is likely to get hit in the session that I'm trading, and then I just close at that target and don't hold for the major ones. Okay, so this is what price looked like in the morning. Okay, I'm in UK time, so when I say morning, I'm talking about London session. I know some people New York is in the morning, but for me, I'm talking about London session. So essentially, price was constantly respecting this 1 hour FVG. We had a sweep of Asia low. Now, if you know about daily cycles, this candle here is 7 a.m. So that's London kill zone open, swept out Asia's low. That is the London protraction daily cycle. Okay, now daily cycles are frameworks that I use to time my expansion. So like I just said, I'm expecting bullishness, right? I'm expecting a bullish day. I use daily cycles to know which session down to maybe like a 2 hour period price is actually going to expand to the upside in, right? So it just allows me to get a bit more specific. So this was a London protraction cycle. After the sweep of Asia down here, I was anticipating price running to the upside. So that's where I wanted to get my entry. But like I just said, I need to identify a different target than these major levels of buy-side liquidity I have here. Okay, so you can already probably see we have equal highs, okay, that got formed. So we have equal highs to reach for, and we also have previous day's high. Now, I'm pretty sure the stat is there is an 84% chance or 86% chance that either previous day's high or previous day's low gets ran for. I'm bullish. We have equal highs as well. So for me, previous day's high and the equal highs were a very high probability target. So what I did was I entered. Okay, I'll show you my entry. My first entry was on the 3 minute. Okay, I entered off of these 3 consecutive down candles. Okay, once they got closed above, for me, that's a bullish order block. Okay, so that's a change in state of delivery. That's what I look for my entry. So I entered there. Stop loss was at the low. As price started to move away, I actually reduced my risk to this level here. So now I had half an R risk to put back on the position, essentially, and scale in because I was confident in the move. So I went ahead and put another half an R off of this bullish propulsion block. Okay, now I'm rushing over it because I'm not here to talk about my executions. I'm here to talk about my target, and how I operate around CPI. So those were my 2 entries, and I simply just held them to the previous day's high level. Okay, and if I play this out, you can see both entries held, and we ran for the previous day's high target. And guess what we didn't hit, right? We didn't hit the major levels of buy side liquidity. Now you may just be thinking, oh, but what happened after that? Did it run towards your target? If I play it out, you'll see that price didn't actually go ahead and run for those targets until after the CPI release, right? And around the CPI release, price pushed to the upside, formed these relative equal highs, and then manipulated my whole position. Okay, so if I hadn't of gone for the conservative target the way I just showed you, I would have just got swept out, right? I wouldn't have made any profits. You can see that price ended up taking out this old low down here, this old low here. And then it wasn't until after that CPI release, okay, that price went and ran for the major liquidity levels. So that's why it's really important to understand the effect that the CPI release is going to have on the week, and having a protocol in place so you can still profit without getting caught out. Okay, now I'm going to put a screenshot of my executions on the screen so you can see that I did take this trade, I did TP at that level, and I did actually manage to get the scaling. And this first execution, right, this one here off of the 3-minute order block with my stop loss here, it was about a 1 to 3 to the previous day's high. I actually called this out to a trade ideas / signals group, whatever you want to call it. It's a signals group that I personally run. I send all my trades in there. So if you're learning to become profitable and you want to make money whilst you're learning how to trade, you can do that. Even if you're not learning how to trade, then you can just go and take the signals. But I mean, if you're watching this video, you probably are learning how to trade. And the best part about it is you can stay in this signals group completely for free. All you have to do is use our broker to take the trades, and you can stay in the group completely for free. And obviously, if you don't want to use our broker, then there is an option for you to pay for the signals as well. In March, we just did 5.2 our returns. So if you're risking 1%, that's 5%. If you're risking 2, that's 10. If you're risking 3%, that's 15. So yeah, if you want to join, go ahead and join the free Discord, which is going to be the top link in the description. And you'll find a category in the Discord server that's going to tell you all about how to get started. Okay, so the next example of when this protocol played out very, very nicely for me is on ES. Okay, so essentially I was looking to sell from this daily FVG here, right? I was looking for price to run lower. If we take a look at the 1 hour, okay, you can see that price manipulated this high over here on the left. And after doing so, we formed this 1 hour CSD. Now you may be thinking to yourself, okay, but the bearish order block got disrespected, right? Because we came above this high here. But the fact that we rejected, right, and we closed and respected this FVG here, I'm not too fussed about it, right? The wicks do the damage and the bodies tell the story. So the wicks have simply ran more liquidity, and then the bodies have continued to respect this bearish order flow that's formed, right? So I was looking to get in on this position. I waited for AM session to start. So if I put on the AM session kill zone, okay, we had a couple 15-minute candles play out before I entered, okay, and once price had displaced like this in AM session, I was happy to get in. So I'm pretty sure my entry was somewhere here. My stop loss, it might have been here, it might have been here. I can't exactly remember. But now if I let this play out, okay, you can see price tags my entry and we start to run. In AM session, we start to run. Now, this is CPI week. This is before the CPI release, okay? Now, my target would be for price to come and take out this low here. But we know that on CPI week, right, price might not reach that target until after the release, okay? So instead, what did I do? Well, what we're looking at here is an AM session expansion. So we can expect this session to expand until around 5. Okay, you can see this is 5 here. At 5, it was at a 1 to 2. Okay, so there's no other liquidity targets on the left, apart from if we go on the 1 hour, okay, you'll see we had this FVG here. That's the only other place that makes sense to take profits, right? At that 1 hour FVG is the end of the session. Price is at a 1 to 2. So understanding this protocol, right, where we want to take profits early, we want to take profits at closer targets, because CPI may stall and we may not reach this low on this particular day because the release hasn't taken place yet, you want to close the position. And as you can see, if I play this out, price reversed and it would have taken you out at break even if you didn't close a trade. And yeah, that is what the protocol is for, right? Understanding that CPI week is not always going to reach for your major liquidity targets until after the release. So you want to make sure that you're taking profits in more conservative places. If you've been watching my channel for a while, you know I drop a ton of value on here with the intention that some of you are going to take that information away with you and become profitable with it. But to become a profitable trader, not only does it take information, but it takes structure, right? It takes a well-structured plan or process that you can repeat day in, day out to extract money from the markets. And for that, I made the Daily Cycles program. It contains everything you will need to become profitable, structured into step-by-step processes that you can follow. Now, if you want more information on the Daily Cycles program, I'm going to leave a second link in the description so you can go and find out more about that. So that is the protocol I use every single CPI week to continue to secure profits without getting faked out. I hope you found value in this video, and I'll catch you on the next one.